Champions League, you can think that we will have full weeks to rebuild the team and to have more time to work. So that is important when we are going to make the plan for the next season. Is really important. It will change everything.
Ruben, what is the
Mic
process
check,
when it
1,
comes to you
2.
picking your goalkeeper? Do you just pick yourself, or do you
Settings,
consult George Vital
audio,
and the other
mic
coaches as well?
Of course,
volume,
the
okay.
staff is there is not just to be there. Of course, I have conversations,
Oh,
and then I have my
let's
feeling as a coach,
see.
as a former player. Then I'm trying to imagine the game because they have, of course, they are defending a goal, but they have different characteristics. So I make the evaluation the same way that I make for the other players. Of course, the other players, the way we want to play is more with me. Of course, I have a conversation with the staff, but of course, Craig and Vital has a huge impact in my decision.
Dave.
Hi, Ruben. Just back on Andre. Is there a danger that taking the decision you did for the Newcastle game, does that not put him under even more pressure and more scrutiny when he comes back tomorrow night?
Yeah, that is the
dilemma.
Not just the dilemma, but this is the big factor on being a coach. Everything you do has two ways, and you can, if he's going to be really good tomorrow, I'm sure of that. But if it's the other way, people will say that it was a bad decision. So we never know. I'm trying to be clear on things and try to make the evaluation be really simple, not overthinking. And when I imagine the game and I see Andre Onana, he had 1 weekend that he rest. Now he's ready to return to the competition, and I chose Andre to start this game.
And just on Europa League, you obviously want to win the tournament, but is this team and squad good enough to play in the Champions League next season, given you're going to finish in the bottom half of the Premier League?
If you look at this moment, I think we are not ready to cope, to be really competitive in Premier League and to cope with Champions League. I think it's really clear, and you have to be really clear. But then you play in one club, you should fight for this competition. You should be on Champions League. If you have Champions League, you know that you have a different budget to try to put a better team for next season. But this team with new players will need time to work. So I think it's something that we will discover next year, hopefully.
Ruben, do you need a new goalkeeper this summer, or are you happy with the goalkeepers you have here?
No, I think we need to improve. So we cannot look to the team of Manchester United and say we are in this position in the league. We have been really underperforming this season, and you cannot change all the players. What we should do is to improve any position on the team with the players that we have and try to bring different characteristics for the next year.
So very politely, can you answer my question? Do you need a new goalkeeper?
Yeah, I know you want one question, but you choose the questions, I choose the answer. My answer is that we need to improve every position on the field. Goalkeeper is the same. We can work with Andre. If the team performs, if our team scores more goal and is more danger on the
Mic check 1, 2. Mic check 1, 2. So, welcome. I'm using a new software to stream today, so it's going to be interesting to see how this is going to conduct itself. But let me get a few things in order. I need to.
Testing the speakers on stream.
How do you? Okay. So I believe we're good to go. Let me clear up a lot of things here. And so we are due to anticipate I like this. I like this. Like imagine opening YouTube and yourself. Anyway. So now the thing is with this, I don't see where they, as I've mentioned, I'm trying this out for the first time with this software. So I don't know where. I don't know where the nani is. No, we don't want any background music, do we? Where's the chat? Okay, so this is the chat box. Now you're getting someone. Comments. Oh, here it is. Here it is. Let's see if it's going to pop up. Welcome to entertainment, to Let Evening Entertainment. Let Evening Entertainment. Yes, sir. Yes, sir, it is. Let me. I don't believe this should be a better. This should be a much better. I don't believe this should be a better. Oh my lord. Oh my lord. Welcome. So the stream is going to start. It's 10 minutes in. It's already 10 minutes in, but welcome. I'm so excited about this. Let me have that silent for a moment, and we focus kidogo. We do what? We do focus kidogo. Let me have this one here. You know how your guy operates, huh? How to rotate. Let me show this guy. Okay, 25 seconds into. No. In the next few minutes, we do anticipate Fed chair coming up, and we want to see what this guy has in store for us today, because it's very crucial that we hear his speech today. After all that's happening, especially after the trade wars, we did see a lot of activity happening in the financial markets, and there was this video, and today I'm going to take you through. I just hope I don't get banned by copyright issues, but I want us to go through a few articles via YouTube to look at what we're anticipating, what has happened in the previous few weeks, so to say. It's been very crucial for us to look at this, especially as traders, because you want to make informed decisions at the end of the day. It's all about making informed decisions. So I really like this. I really like this software. It's a really good software to be using in terms of, okay, very interesting. And I do believe I can change it. But let's get started. So moving over to the with Forex Factory. Now, earlier on today, at exactly 4:45 UTC plus 3, we did anticipate Canadian dollar having their bank rates low, constant, meaning they held their rates at 2.75%. Now, we did see some bit of activity, considering that yesterday we did have their CPI coming out, and it was actually not bad, meaning that inflation is headed towards the right direction with trimmed CPI of 2.8% year-on-year release. Now, this is interesting for us because we would want to see what happens in the near future. Every asset right now against the dollar is considered a safe haven. Now, when you look at USD Canadian dollar, we did have this position yesterday. It did take us out. Huh? It did take me out here, but the trade is now moving in my favor. And this is something that we usually see in the financial markets happen so much, whereby it's very normal for such kinds of things to happen, whereby your trade hits a stop loss and then continues in your favor. Now, for today, it's going to be crucial. Today is going to be one of the best days, honestly. Honestly, I do believe this is going to be one of those best days. Gold, okay. Officially, let me start the stream. So this is 1446. This is the new software that I'm using. It's really good. I really like the interface. If you can look at it, it's wow. Now, USD Canadian dollar ilitufanya masaka hapa hivi, whereby we did hit a stop loss, but went in our favor, which is, it's okay. It's okay. It hurts. I'm hurt, but it's okay. It's okay. I'm consoling myself. And once again, it's okay. But moving over to gold, gold is one of the best assets that I've been looking at. And I remember doing this analysis a few days ago. Today is 16th, whereby we did the analysis on 13th. And we did look at these possibilities, and I did highlight that there was a possibility. I'm not a prophet. I am not a prophet at any possible way. And I remember I was looking at this trade yesterday. Let's look at this. Let's say supposedly, if you go back in time, this trade was somewhere around this region. And when you're in a particular position and you sort of question yourself. You're sort of, hey, this trade. Because imagine entering, I did enter at this position. I do remember it was around 32.12, somewhere around that region, and immediately prices went against me. But I do believe in my strategy. I do believe in my back testing. But the following day, which was yesterday, I was looking at this price action and I was asking myself, like, aish, will this go in my favor? And then, as fate would have it, you wake up in the morning, you're in blue. Then the question now begs, should I close? Because look at it this way. Imagine you being in a drawdown for how many hours? And I want you to follow with me on this. Oh, the speech is about to start. For nearly 1 day, 13 hours. And then all of a sudden, the trade starts going into your way. Emotions. So I would want us to look at the Fed chair. He's due to speak today, and I do believe I'm sharing the screen for the let me just confirm something here, kidogo. I don't want to mirror my camera. Yeah, I want it to have that. Okay, I do believe I can share the audio of the check sound. Are you sure? Can someone confirm if my audio is? I do believe my audio is okay. Awful sound? Damn. I'm looking at it via my device and could this be one of those issues where it's just okay communication synoptics? Because mic check 1 2. Mic check 1 2. How's that? Can someone confirm is that if that is okay? Mic check 1 2. It's still not good. How's that? Can someone confirm is that if that? Because as you can hear, yeah, I can hear myself in the background. Can someone confirm that for me? Because I did see those something here, high definition. Okay, orientation settings are disabled while live. I did set it at 720 pixels, huh? So I do believe you have to increase your pixels because 720 it's quite high. How's that? It's the new software that I'm using. Good now? Okay. Okay. Oh, we're quite behind on that. So I do believe it's the headsets. So let me just dump this. Let me just dump that and then let me do this. So the good thing is the chair has not yet started speaking, huh?
Department of Labor in that same administration. Betsy, welcome back to Bloomberg.
He
These
still
things
hasn't
are in
started
tension with
speaking.
each other.
In case of
And we are
anything, just
very
shoot it
lucky
in
to
the comment section
have
below.
a very thoughtful, well-informed
But
Federal
let me do
Reserve
this
that
as
is thinking
usual,
through
and
all of the
then
data
we
points and will act as
have
quickly as they need to.
Well, and will they be able to continue to act with the independence that they need to, Betsy, given the rhetoric we've already heard from President Trump, who already thought weeks ago it would be a good time to cut rates?
Well, I think that threatening the independence
Mhm.
of the
I do believe you're
Fed
okay.
is about the worst thing you could do for macroeconomic stability. If you think we saw chaos with tariffs, I think Trump taking over the Fed is a level of macroeconomic chaos the United States has never seen.
Well, on that note, we're hearing from the Chicago Fed President Austin Goolsbee as he gears
Okay.
up to
Okay,
introduce the chairman
okay.
here.
This is
He
it. This
says,
is it.
quote,
This
Powell has the
is it.
respect of both parties, and no one as Fed chair has had to deal with more
So you're going to
challenging
be focusing
issues
on gold, huh?
than Chairman Powell, as we consider that he had to navigate COVID as well. I guess it
We
has
shall
been
be
a
focusing
pretty
on gold.
tough road here. Betsy, finally, when I'm just looking at markets, right around 430 on the 10-year yield. We're down 3 basis points on the day. How much, if we continue to see the kind of financial market volatility, and I'm going to cut myself off because Austin Goolsbee has just walked off the stage. So
Whoa.
Betsy, we'll let you go as
Okay,
we
this
expect
is
Chairman
interesting.
Powell will be the next to speak. Betsy
Most of
Stevenson, professor of
the
public policy and
indexes are down.
economics at the University of Michigan. Thank you so much. And we'll go now live to Chicago at the Economic Club.
Welcome.
The Fed Chair Jay Powell is speaking live on Bloomberg TV and radio.
And thanks for that kind introduction, Austin. So I'm looking forward to our conversation, my conversation with Professor Rajan Raghu. But first, I'll briefly discuss the outlook for the economy and monetary policy. So at the Fed, we are all.
I like this introduction speech because they're usually the same.
Maximum employment and stable prices.
They're usually
Despite
so
heightened
they're so
uncertainty and
similar.
downside risks,
What
the
am I
U.S.
doing,
economy
man?
is still in a solid position. The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective. Turning briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed.
Very normal words, Very normal words. Usually the introduction, it's usually the greetings. It's usually the greetings. Hello, good afternoon, and then blah, 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 yada, yada, yada. This speech is going to be similar. Now, the most important thing that you want to look at is the questions, and that's what we want to be very interested in today. Now, looking at the hub, there's a possibility we might still move higher. We are in territories we have never been before. So I will want to go to the 5-minute time frame.
Elevated uncertainty about the outlook, largely reflecting trade policy
Remember, I'm in
concerns.
positions already. So right now the
Outside
train has left the
forecasts for the
station.
full
If you're
year are
trading,
coming down,
ish,
and for the
because where
most
will you
part,
have a stop
point
loss
to
right now?
continued
A
slowing,
stop loss will
but
be
still
faithful.
positive growth.
But
We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew
which is
by
good.
an average of 150,000 jobs per month. While job growth has slowed relative to last year, the combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers
could we see a short-term retracement for today, just for today?
Level.
Just
Wage
for
growth
today.
has continued to moderate while still outpacing inflation. Overall, the labor market appears to be
So this is why it's very important. It usually starts with labor, then inflation. Non-farm payroll during the first week, then CPI the following week.
As for our price stability mandate, inflation has significantly eased from its pandemic highs of mid-2022 without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. Progress on inflation continues at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total
I
headline
do believe
PCE
we
prices
might see
rose
short positions.
2.3%
Just
over the
looking at
12
these
months ending
probabilities.
in
Now, the
March,
problem is the stop loss.
and that
Oh my
excluding the
lord.
volatile food and energy categories, core prices rose 2.6%.
If you can get 100 pips for this stream, it could be really,
Looking
really
ahead,
good.
looking forward, the new
Really,
administration
really good.
is in the process
But I would
of
want to wait
implementing
for
a substantial
for the question
policy
and answer,
changes
because that's
in
where usually
4
most of the
distinct
volatility comes into
areas:
place. The question and
trade,
answer.
immigration, fiscal policy, and
So
regulation.
this one,
These policies are still evolving, and their effects
and
on the
today he's not
economy remain
energetic. He's
highly
usually
uncertain.
very energetic. I remember
As
the
we
last
learn
time
more,
he was
we will
asked about
continue
these
to
purple ties, and
update
then
our assessment.
the political.
The level of tariff increases announced so far
But looking at the
is
assets today,
significantly
oh my
larger than
lord, we
anticipated,
have
and the
seen
same is
quite the
likely to be
activity.
true
Gold is
of the
up
economic effects,
3.1% for the
which will
day.
include higher
Dollar index
inflation
down
and slower growth.
0.6%. The volatility index has
Both
jumped
survey and market-based measures of
5.1%
near-term
just
inflation
for the day.
expectations have moved up
Treasuries have
significantly,
picked up, but US
with survey
500, NASDAQ,
participants
US
pointing
30,
to
Russell
tariffs.
has both taken
Survey
a dip.
measures of longer-term
Bitcoin has
inflation
gained at least
expectations, for the most part,
1.24%.
appear to remain
Oil
aligned
is
as
doing
well.
good, especially Brent oil,
Market-based break-evens continue to run
4.7%.
close to
WTI, Western
3%.
Texas oil is at
So,
1.6%.
as we
For
gain a better
currencies, we are
understanding of
in
the policy
limbo. The
changes,
only
we'll have a better sense of the
biggest loser
implications
for the
for the
currencies,
economy
if I can
and
look
hence
at
for
this,
monetary
is
policy.
USD Swiss franc, which is currently
Tariffs
down
are highly
negative
likely to generate at least a temporary
1.04%.
rise in
Euro dollar
inflation.
up 0.89% for the
Inflationary
day.
effects
Chinese
could
yuan
also
more or
be
less
more
equal to where
persistent.
the day did begin. Now,
Avoiding that
this is
outcome will
whereby
depend on the
if
size
wishes
of the
were horses,
effects, on how long it takes for them to pass
I
through
should have
falling
entered.
prices,
But
and ultimately on
I'm gonna keep
keeping
my calm. I'm
longer-term
gonna keep my
inflation
calm. I'm gonna keep my
expectations
calm.
well
Let's
anchored.
wait for the interrogation aspect
Our
of things.
obligation
So
is to
oil
keep
must ensure
longer-term
price hike.
inflation
Now, the most
expectations well
important thing we
anchored,
want to look at is
and to make
what's
certain that
going
a
to happen on
one-time
the
increase
27th. I do
in
believe it's
price
the
level
27th, which is
does
going
not
to be
become an
CME
ongoing
Fed Watch
inflation
2.
problem.
Come here, baby girl.
As we act to meet that obligation, we will balance our maximum
In
employment
the
and
next
price
21
stability
days, yeah?
mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions
In
that
the
benefit
next
all
21
Americans.
days. So there's
We
an
may find ourselves in the
86.5% chance we're
challenging
going to
scenario
hold the
in
interest
which
rates
our
where they are
gold
between
mandate goals are
425 and
in tension. If
450
that were to
basis
occur,
points.
we would
But
consider how
there's a
far the economy is
13.5%
from
chance.
each
This is
goal
relatively
and the
low,
potentially different time
meaning by
horizons over
7. So
which
it's going
those
to be 7
respective
May.
gaps would be anticipated
So
to
Tare
close.
Sabba May, which is going to be in exactly 3 weeks.
As that great
So
Chicagoan
during this speech, we
Ferris
would want to
Bueller
also
once
monitor
noted,
these probabilities.
life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the
Very
incoming
crucial.
data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families,
So they're
and
going to hold
businesses.
rates just for a
We will
little while
continue to do
longer. Now,
everything
Trump
we
is looking
can
at this
to
speech,
achieve our
he's
maximum
like
employment and price
blowing
stability
his
goals.
head off.
Thank you, and I look forward to our
Okay.
discussion.
Any questions? Very good. So this is where the volatility usually comes into place. This guy is not energetic today.
That was the chair of the Fed, Jerome Powell, delivering his prepared remarks.
Thank
He'll
you
now
very
take
much,
part in
Chair
a
Powell,
moderated discussion with a professor from the University of Chicago's booth.
Okay,
Begins
this is where the volume usually comes into place.
40 minutes or so. I understand
This
last
is
time you were
Chicago.
here,
We are
Melanie
in
Hobson
Chicago.
interviewed you. Well, I'm a poor substitute, but I'll try and compensate in the quality of the questions. As you repeatedly emphasize, communication and transparency are very
The US
important
500,
for the Fed.
whoa,
I would like to get more
Whoa.
from you on some
US
of what
500
you
is
just
tanking.
said.
Volatility index is
Banker,
picking up.
the only sort of
In the
caution
past,
I've
how
been
many
given
minutes?
by the economic club is to not lapse into central
In the
bank
past
speak.
2 hours, 5
So I'll
minutes,
try
the
my best
volatility
not
index
to
has
do
jumped
that.
8.9%.
Let me start by saying you've guided the Fed through some
Okay. What could this
really
mean
difficult
eventually?
events, including the
The dollar
pandemic,
index for the
the
day,
dash for
nah,
cash
not doing
in March
anything
2020,
as anticipated, but
great
the volatility
inflation,
index is
the
giving me,
banking
okay,
crisis
this is very
centered around
interesting.
Silicon
This
Valley
is really,
Bank.
really interesting
And then
because this
over
was
the
the
course of
opening
the
days
last year, we've
volatility
seen a
index price
growing
at 30. It
possibility
did jump, it
of
did
a
spike to 33,
Fed-engineered
came back
soft
down.
landing.
Currently, we are in that
And
region of
now, it
inefficiencies,
seems
the
like
gap that just
everything has
opened
changed.
today
In the course of a
morning.
couple of months, JP Morgan has shifted to estimating the probability of a recession this year at around 60%. What do you think about all this?
Well, first of all, thank you for being here today. It's a pleasure to be here with you. Actually, the speech or the appearance I did here.
Yeah, JP Morgan has a 60% chance of a recession. What do you have to say about that, Mr. Paul?
And I would agree with
Nasdaq
you.
is down 2.7%.
7 years. Putting it mildly, I keep waiting for the 3 months of calm, that never comes. But to your question, I guess to set the stage, let's look back at 2024. 2024 was a year where the economy grew 2.4%. Unemployment remained in the low fours, close to mainstream estimates of maximum employment. And inflation came down and was running at the end of the year around 2.5%. That's the economy that we had. And I won't decide how to.
Okay, this is interesting.
That's worth thinking.
Stocks are tanking.
Where we are now, again, to your question, is
stocks are tanking, especially Nasdaq.
As I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So
but this doesn't make sense.
Is likely to go up as the economy slows in all likelihood.
Like stocks are tanking, but the dollar is gaining strength against other assets.
Some part of those tariffs come to be paid by the public. So that's the strong likelihood. And my hope is that we'll get through this and get back.
Yeah,
we're always
interesting. Very interesting to note.
Employment and price stability. That's what we do. I do think we'll be moving away from those goals probably for
against the Japanese yen US is tanking.
And then, or at least not making any progress, and then we'll resume that progress.
But for gold, it's gaining.
Let's talk a little more about tariffs. I mean, you recognize that some of the effects of the tariffs will be one-off, transitory, but you also have said that perhaps they will give room for a number of firms to raise prices. You mentioned dryers. When washing machine prices went up because of tariffs, dryer prices also went up in tandem, even though they weren't tariffed. What's your sense about the effects of tariffs on inflation? What would make them more persistent, and what would make them have effects on growth?
So in a kind of a simple story.
Whoa, the volatility index is
one tariff comes in that gets passed along in prices. And
what does this mean?
Inflation, but it's just a one-time thing. So the price level goes up, and that's it.
What does this mean? I've never seen a speech like this
in some
before.
Circumstances, but it depends on a number of things which we don't know yet. And I would point to a couple of them, or three of them actually. One is just the size of the effects, and as I mentioned, the tariffs.
The speech began at 8:45. Let's say somewhere around 8:45.
Expected, certainly larger than we expected, even in our upside case. We looked at a range of cases.
In the past in the past 20 minutes, the S&P
the tariffs to have their effects
has lost 1% of its index value.
Longer, that raises the risk that
Okay,
the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect
Nasdaq
it.
something down 3% for the day.
And the third is just
Tesla?
what I mentioned in my speech, which is my remarks, which is got to keep
wherever Elon
inflation
Musk is.
expectations
Oh my
well
lord.
anchored. So if we have those
DAX
those
40 is
three things
gaining.
under
DAX is
control,
gaining.
that's what it will
Nvidia
take.
down
And
8%
indeed,
for the
our
day.
goal is to make
My
sure
lord.
that this will be a one-time increase in prices and not something that
Apple.
turns into an
Let's look at
ongoing
the stock heat
inflation
map.
process.
I was looking at the stock heat
That's a
map
big
before
driver.
this, and I was like, maybe we might recover, but right now, I remember starting off. I'll go back to the stream, but I do remember Tesla was around 1% before the speech of Jerome did begin. But currently, at the moment, Tesla is down 4%. Nvidia, it wasn't this way when we started the stream.
From China, given the level of prices.
Nasdaq, I do believe it could be the same thing. Nasdaq, whoa.
Would the Fed's response be different?
This is the power of watching sentiment. Technically, this is not fundamentals. This is more of sentiment analysis because.
Chicago Fed last night, and
okay, it can be both. It can be a balance of both. But technically, when you're listening to someone, especially mankind, it's more of sentiment because you're looking at his thoughts. What do you feel the economy is going to do in the next few?
And the issue with imported components to their products is just a huge issue. But with if you look back at the pandemic, if you remember, there was a shortage of semiconductors, and that led to a shortage of cars at a time of extremely high
people
car
bought.
demand.
I never understood that
It
factor.
was a prolonged shortage because
most of the people are complaining during COVID, but for some few individuals, things were going really well.
One of the things that led to an extended
That's
period
when
of
we
inflation.
started
So
trading,
when you think
actually.
about supply disruptions, that is the kind of thing that can be that can take time to
Yikes.
resolve and that can lead.
Closing price for Apple
what
yesterday
would've been
was
a one-time inflation
$202
shock to be
a share.
extended, perhaps more persistent.
Right now it's
and we worry about
194.
that. In this case, you could look at
DXY,
the car companies, which their supply chains are
DXY,
likely seem to be on
DXY.
track to be disrupted significantly, and you would
Not doing
worry
anything.
that
But the
process
most
will take some
like this
years,
is what really
and that the
has my
inflationary
attention.
process might be
The
extended.
volatility
So
index.
these are all, all of this is highly uncertain. We're thinking now really before.
Because
the
one thing
tariffs
to
have
note
their
about what he's
effects
saying is we are going to
and how
hold the
they might
interest rates
affect the
where they are
economy. And
currently at the
that's
moment.
why we're waiting really to see what the policies ultimately are, and then we can make a better assessment of what
Still
the economic
monitoring.
effects.
So as of wow, look at
Let's move
volatility
to
index. The volatility index is
immigration.
really,
You
really.
talked about the labor markets
So it's
being
currently at
in
a 6.5% chance.
equilibrium right
What about
now.
18th July?
Of course, what we've seen over the last few months,
So the earliest we might see
months
rate
of the
cuts
previous
will be July.
administration continuing into
And with
the
this
present
one, we have
administration, is
a
immigration has fallen
58.5% chance that they are going to lower rates.
What's your sense on how that will affect the
Okay.
labor market?
So what part of why growth was so strong in the last couple of years was just very high levels of immigration, and those people went to work. The economy hired them. You know, there was a lot of demand. We were still working off the labor shortage. What's happened since the prior administration changed their policy?
Now I'm
as
looking
you
at this
mentioned,
position on gold. I'm like,
immigration
wait,
has
oh my
fallen very
lord.
sharply, and therefore work.
If wishes or horses,
of
man, I'll be the
workers
biggest
has
beggar on
really
earth.
stopped. It's really stagnant. But at the same time, demand has also
This is how many
fallen.
pips?
And so demand for workers, so payroll job
Like
creation has
30?
also fallen.
Okay,
and they've kind
nothing
of fallen in
too
tandem,
fancy about
which is
it.
why the unemployment rate has been pretty stable for about a
100
year.
pips, could we?
So in a way, demand and
Could we?
coincidentally, perhaps to some extent, demand and supply for workers has fallen.
Because looking at the
terms
daily
of- so
candlestick
in
on
terms of the
gold, it's
effect on the
very,
labor
very,
market,
very extended.
right now, we're
Very,
still
very
at full
extended. Huh?
employment, and labor
Very
force
extended. We
participation
have
is
these
still
regions
strong.
of
Wages
inefficiencies,
have
but
moved back down
it's
to
very
levels that
unlikely
are
prices
pretty
will come back
sustainable, given an
to these
assumption
lows.
about
Now
productivity.
today's
So the labor
Wednesday. We
market's
have
in a
two
really good
trading
place.
days. Actually, it's one
Longer
trading
term,
day. We
you
have
know,
tomorrow only because on
the
Friday it's going
effects
to
of
be
immigration are not thought to
a
matter
holiday,
much for
same as
inflation. The
Monday.
effects on demand and supply
So it's
will
going to be
far
very
exceed,
interesting. So if you have a
cancel out
position
right now.
running
So
tomorrow
we wouldn't
evening,
expect
please
there to be a big,
be very
impact
cautious
on
about it. Huh?
inflation.
Be very, very cautious about it.
You've
Because
seen in
one
recent,
thing, how will the
recent
markets open on
weeks
Tuesday?
substantial
Come Tuesday,
talk about layoffs in
how will it
government,
open?
as well as freezes in
Because
research
volatility index is up
establishments and
9,
universities in
9.6%.
jobs.
Actually, it's gaining as
How
by the
soon
seconds.
and how big will this
It's
be
actually
in its
gaining by the
impact on labor
seconds.
markets?
So it's too soon to say, but what I can say is, of course, the people being laid off.
Yeah,
in
we did
government,
have
this
that
is highly
issue.
significant to them. We don't know how big that's going to be. Right now, it's not big enough to affect
It was
a
last year
workforce of
around October,
170
November,
million
whereby there was a
people
massive strike in the
materially.
United States. Huh?
In terms of
That one seems to be sorted. People are
the
coming back. Not
cutbacks
everyone,
in
but people are
funding and for
starting to come
science and
back to
things like that,
the industries. But
we
what
do
you're speaking
see
about
in
right now is
areas,
very crucial.
particularly in cities that have a lot of universities and research hospitals and research institutions. We're really hearing significant
In terms of
significant impacts on
government.
I don't know how much that will total up to. And of course, in addition, cutting back on scientific research may have implications for economic growth, for productivity, for health, for all kinds of things. But those are very difficult to estimate in real time.
Okay, the volatility index
Now,
is coming
given
down.
that we're talking about the future, you may be confronted in the not so distant future with both higher levels of unemployment as well as potential.
Yeah, when you're
higher
looking at
inflation.
unemployment, let's just
And
go
of
back
course,
to.
The policies that each one requires.
Let's look at
You talked
unemployment
a little bit,
numbers
at the
for the
podium about
past.
how the Fed would see these two and how it would address it. Just giving you a chance again to elaborate on that.
Right.
So yeah,
most of the
this is
time,
NFP numbers. Let's
when the
go
economy is
to
weak,
2024,
inflation is
starting
low, and
2024.
unemployment is high, and both of those call
Okay, the
for
numbers have been coming down
lower interest rates to support
drastically.
activity, and vice
From
versa.
highs,
Most of the time, the
we
two
did
goals
see at
are
around
different, and
510,000
they're not
jobs.
really
It was
intentional in the labor market
528,000 to be exact
But
after the
the
revision
shock that we're
back in
experiencing
August
calls for
2022.
significant
Now the numbers have been
fear
coming down,
falling,
but not
along
something
with
alarming to be
higher
worried about.
unemployment and higher
Now we
inflation.
did speak
And,
about this. This was the
our
strike that we
tool
did have
was one of those
towards
tools at the
November
same time.
last
So
year,
it's a difficult
whereby the
place
job
for
numbers came
central
out
banks,
really, really
to
low.
be in.
But an average of 200,000 jobs is good.
The best
According to
way
these
is
people,
we actually
it's
have a little
good.
provision in our consensus statement, which is the thing that
unemployment rate, 4.2%. In an economy of more than 300 M people, 0.1% is not that much of a difference. So unemployment numbers came out really good. Not really good, but it came up better than we did forecast. We did forecast 137,000 jobs according to forecasts. But looking at CPI numbers, which was really, we did see inflation progressing towards the 2%. Now, for these people to be certain about cutting interest rates, they want to see this number below 2.something%. But we are headed there. We are headed there. If you look at the previous number, it was 2.8%. We were forecasting 2.5. Actually, inflation numbers came out much lower than anticipated at 2.4%. So all of this, when you're looking at, and this is why most of the people don't like trading.
One of the effects is
most people don't like trading fundamentals because it's so much data. You have to look at, and it takes time because NFP comes out during the first week, CPI comes out during the next week, the following week. You do have retail sales, PPI coming out, and then the Fed have the final say in what the long run is going to do. So people opt for smart money concepts, people opt for technical analysis because it's much easier, it's much simpler. But when you look at it from a general scope, if you're building a house in terms of forex trading, this is just my opinion, yeah? Fundamentals need to be the foundation. You need to understand how NFP impacts the market, because unemployment is directly corresponding to a currency valuation. Because if more people are employed, it means money is going to be in circulation. If money is going to be in circulation, it means an economy is generally going to do well. When you look at inflation numbers, if the prices of tomatoes are higher, then it has an impact on a currency. But at the same time, if prices of tomatoes are really low, then it also has an impact on the currency. Now, this is very crucial. And not only in trading, but if you're looking at it also in your local currency. If you notice about inflation numbers, usually in the United States, the following week, usually Kenya drops their inflation numbers, like their central bank rates, so on and so forth. Now, this is very crucial because if you want to be financially intelligent, if you want to be smart about finances, if you see that the United States will lower rates, there's usually a corresponding lowering of interest rates by the Central Bank of Kenya. Now, if they lower interest rates, then it means, okay, debt is good. Debt is good. And that's something else that we will want to see in the near future about the United States dollar, about they are really approaching their debt ceiling quickly. And we want to see, because I do believe it was November 2023, whereby they did increase their debt ceiling from like 8 trillion to like $10 trillion. So they're approaching that ceiling. So what next? What next? Because remember, debt is what builds a nation. Because the more money you move in a particular economy, the stronger it's going to be. So debt is very good. People are very worried about Fuliza and all that, but debt is good. If you know how to use it, then it could be a good opportunity for you. But looking at this speech on the markets, so if wishes were horses once again, a volatility index has jumped. Oh my lord!
Having said that,
so meaning tomorrow's opening price is going to be very interesting to watch out for.
Doing what they're supposed to do. They're orderly. And
tomorrow's opening price is going to be very, very crucial to watch out for. Are there any questions? I don't believe so.
So we've seen volatility also.
Bonds, yes. Talk about bonds.
At a time when usually there's a flight
because
to safety.
We saw treasuries being offloaded. Okay, treasuries are picking up for the 5-minute time frame. But if you look at treasuries on the weekly perspective, it has been offloaded so much.
Treasuries go up. What do you attribute this to?
So I would just say the same thing. I think it's very hard to know in real time. I've had a lot of experience with significant moves, for example, in the bond market, where there's a narrative that people land on and then 2 months later you look back and go, that was completely wrong. So I think it's very
You know what
premature
to say, Baba.
exactly what's
Just say
going
it.
on. Clearly, there's some delevering going on among hedge funds in levered trades and things like that. It's also, again, it's the market's processing
Because a government,
unique,
now the thing about bonds and treasuries
great
is
uncertainty. You'll probably see continued volatility. But
a government is essentially a business. At the end of the day, a government is a business. Ni biashara.
I would just say markets are
And how do these people make money? Basically, if you buy treasuries and bonds, it means you're giving the government your money, they go invest it, and then they return an interest to you. So if investors lose confidence in the bond markets and the treasury markets, it means that we are not so certain about the economic situation currently at the moment, and it's not a wise idea to give the government your money at a particular point. Especially, so this is how you usually look at such. When you look at, okay, treasuries are picking up for the on the 5-minute time frame. But if you look at treasuries on the weekly perspective,
so we don't think we're close to the
ever since 2022, and this has, okay, sources have it that China was the biggest, not the biggest necessarily, but they had a very good share in the bond market of the United States. They bought a lot of bonds and treasuries in the United States. But with everything that's happening currently, ever since 2020, you can see ever since COVID times, we have seen massive offloading of bonds and treasury bills from highs of 179 to nearly 88 in less than 5 years. That's quite significant. That's very, very alarming.
We decided to slow the pace instead, and people really came to see the merits of that because the slower we go, the less the smaller the balance sheet can get without disruptions, and we want that process to continue.
I want to see gold moving.
So we think that's a really good thing. So that means it can go on for a longer amount of time, and we'll be able to reach kind of very carefully.
But if we do take out 33.20, then I'll consider this a successful stream.
What about the international dollar-based system? With all these disruptions, do you stand ready to supply dollars to central banks as you've done in the past when there's been a global shortage of dollars?
Aye. Sure, oh my Lord, that's a very, that's a very good answer. Let me take you back to September 2020.
Central banks, and they go to
2022 or 2023,
where there are big.
Let me go to the weekly perspective.
Funding markets, and in fact,
it was just after Russia, Ukraine. I'll never forget it.
A European or Asian
it was here. I remember the price action so well. It was September 2022.
So in effect,
this period here. Now, let me take you back through history. I loved history while I was in high school. So
the way it works is when
needed, we lend to the central bank. Russia and Ukraine started fighting, this was back in February. Yes, it was this specific kind of thing.
So we take no credit risk.
There was a shift in
it supports
because there was a shift in how people saw money.
Sensitive during times of crisis, and it's very
especially Russia and China. Like China were looking at what's happening to Russia, and then they were taking lessons. Whereby Russia had reserves in the United States dollar. Okay,
and we will do that.
And when they started this war with Ukraine, all of a sudden, their assets that were denominated in the United States dollar were frozen. Because at the end of the day, the government asks you, it's your money, yes, but what's it written? Is it the Russian ruble or the United States dollar? So when China saw that, and when the world saw that, because they had massive reserves, because the dollar is the reserve currency of the whole world. So when people saw that, especially China, they were like, oh, we need to start covering our positions that are denominated by the United States dollar. When the government saw that, they started printing a lot of money. And this is what we saw happen between February, March 2022, around this region here, till September. Now, the thing was, this is when inflation started. It reached a point whereby the United States started printing a lot of money putting it into the economy. Now look at it from this perspective. I worked so hard to get $100. The Fed Reserve, Mr. Jerome Powell, decided to print $100 trillion. All of a sudden, the $100 that I worked for is no longer valuable as much. So it reached a saturation point whereby the bubble started bursting. This was around this region, and I remember it so well. This was the point whereby September, October, November, this was the point whereby China started accumulating gold in massive amounts. From September, October 2022, 16 months. For the next 16 months, China started buying gold heavily. And I remember looking at price action, and trading reversals is dangerous because we were looking at prices of gold. We were like, it has to come down. It has to come down. And then most of the people blew their accounts. I blew several accounts during, especially February. Yeah, I remember, especially February during that period. Somewhere here. Yeah, it was February. Somewhere around this price action here, whereby the markets rallied. February 2023. I shall never forget that. And then we started seeing prices rallying to the downside. We were like, yeah, finally we're going back to the dollar is going to be stronger. But look at what gold did till where we are currently at the moment. So the answer that Jerome Powell has given us is very interesting because he's like, yeah, we'll still continue printing. Very dangerous, eh? I think that alone has, yeah, that statement alone has really, whoa, look at that. Okay, that statement is powerful. That statement is really powerful. That statement is really powerful. Are you going to give the central banks more money? Yes, I am. Without any fear, without any hesitation. Are you going to print more dollars? Yes, we are going to print more dollars.
It's grown.
What does that mean?
The provision of credit by non-banks is grown just really fast. Most of it has been funded, though, with a private equity-like structure where it's limited partners who are signed up for 10 years to a general partner to invest that.
Volatility index has
Who can run,
tapped into 10%.
Your money's committed, and that's so that
coming back down
is kind of run-proof.
S&P 500 is starting to correct a bit, but
nature though. So when you do start to see shorter
this is very interesting.
Creeping in.
Treasuries
Raghu,
correcting the move that it had made already. But looking at GBP USD, let's look at GU. Nothing's happening. Euro dollar, nothing's happening. USD Swiss franc, nothing is happening currently at the moment. But that statement has really shook me. If I was net long in the United States, I will be quivering in my boots.
That the banking system has. So we're watching it carefully.
I want to start looking into this asset, NSE 500, NSE 25. I do believe this is the NSE 25.
Signed up for a long period, but we're watching carefully.
Right, wearing my banking research hat, actually banks are also involved in funding these institutions in a big way.
I'm glad I didn't sell it.
We do know the administration wants to relax regulation
because one statement can change a lot of things.
May well be
so
banking.
Let's scrap that
what
idea.
Can you tell us about the Basel III endgame?
Any questions?
Speak, which is, at this point primarily focused on additional capital for the large banks.
I hope I'm not losing you because fundamentals takes a bit of time to understand.
That we should proceed to complete the
Basel III, yeah. So that was what was happening. The Basel III system, whereby history has it. I'm a very good storyteller.
International minimum standards. That's kind of a common good. And we're not bound by them. Really, nothing. The United States has plenty of input into what.
So I'll want you to go look into the Basel III. Yeah? But if I can break it down to you, it was after. Actually, it was a bank that crashed. The most recent bank that crashed. I can't remember its name exactly, but it started with 2007 to 2009, whereby the United States was heavily dependent on credit, whereby they were giving people credit. Like in the United States, there are these student loans. There's a lot of things. As I mentioned, they are really built on debt. So what happens is that, and we saw the same thing happen in Kenya, whereby with the Hustler Fund, money goes out, but it doesn't come back. It goes out, but it doesn't come back. So think of it as a situation whereby a lot of money was given out, but it reached a point whereby, and I remember there was something about housing. Housing was the thing that really crashed the market because people took out mortgages so much. People took out loans to buy homes. People who didn't have money enough to buy homes were given opportunity to buy homes that they cannot afford. So what eventually happened? It reached a point whereby people cannot pay for those loans. That is money that went outside, because when you're dealing with buying of homes, money has to be used. So money went. It was like a house is not it's not an asset but a liability, because you cannot eat the walls, you cannot eat the floor of your house, but those things cost money to do. So it reached a point whereby after the crash of 2007, 2008, there was these regulations, and it did peak a lot during this period that I've just shown you in gold, whereby they required banks to have much more in terms of their depository to lend out money. Let's say if I was to give you a loan of $100, there had to be collateral of an equivalent amount. Now, most of the times it was required that they do have gold. So if you have, let's say, for example, $1 billion in your bank account, and then you want to give it out, you need to have some sort of collateral in case that money doesn't come back. You have assets, or you have collateral that is going to do what? Cover up that money.
Certainly, they worry about in passing, but the Fed worries much more about. That is the rate of
So this is very interesting to note of the Basel III.
So even though we're coming down to 2%, people remember that over the last few years, it's been over 20% increase in prices. So as you start thinking about the policy review, is there any thought about how you might want to address this sort of challenge, that it's the path of prices?
It was back in 2017 to 2019.
Rate of change, which
but there was a recent bank that collapsed and
all,
it triggered everything.
I think you're right. And
I can't remember which bank
right.
it was
When,
exactly.
when
But there was a
say
bank that
inflation is
crashed
back
because
down
of
to
a
2%,
similar thing.
2.5%, and we think that's a good thing. It is a good thing. But if you're, if you're paying 20% more than you were paying in 2021, that doesn't help you much. You're still paying a lot more than you used to be paying for the necessities of life. So
Real Madrid versus Arsenal is going to
hate inflation. And
anyway, this is much
it's
better.
easy to understand why.
Any questions? Any
we
questions?
all we
Any
can really
questions at the moment? So
control
we are
is,
59 minutes into this.
I
I do
world
love
in
these.
which in the world
I'll
we're
go watch
living in,
this stream again
prices
just
don't go down
to
in
see
the
how
aggregate
things are
except
going,
in
because
extreme
you live, you
times that we
learn.
don't want to court. So I don't think we couldn't have a framework where we're going to bring prices down.
Right
by
now it's
10%
very
or something.
volatile. Right
That's
now
not
it's
something
not
we'll
a
be
good
looking
time
at.
to be trading, but
we're
it's good
essentially looking
hearing
at
this guy, because
the best way
this is
to
the person
foster
who is in
2%
charge of the Fed
inflation over
Reserve.
time.
He
And,
holds
the
more
things we
power
did
than
back in,
Trump himself when
the
it
changes we
comes
made
to
in
the United States
2020
dollar.
were
So
really
whatever this guy has to
innovations
say,
around what to do
you
when
have
you're
to pull
stuck
your
near
chair and
zero.
listen to him.
Now we're well above zero, and it
Can't
may
have
be
a
that
strong
we still
labor
need to
market
have
without price stability.
in our framework
Yeah,
a
labor
way
is
to
good.
deal with
Everything
that.
is good. But the thing
perhaps
about it, it's a
the
recession.
main case
Like that's what
is
Americans are really
not
worried about.
one where you're dealing with the
What
effect
are
of
the
a roll
tariffs
down,
going
and
to
that would be a
do in
framework
the
that
long
looks
run?
a lot more like the one that we had before 2000.
And that statement
one
alone
the
of he's
tools
going
you
to
brought
give
in
central
to deal
banks
with
more
the
money,
zero lower bound was quantitative easing.
that's
But
going
you've
to
also
flood the
used
economy.
quantitative easing to fix disruptions in the
That's going to
financial
bring
markets.
inflation back higher.
Are you going to be more specific about what your objective is with quantitative easing as you go through this review?
So in the beginning, it's typically we're using it
So
for
the
financial market
volatility
function.
index is coming
That
back
was the
down.
case with the
But
with the
be very
global
careful,
financial
especially
crisis
for
and
those
with
who
the
are trading
pandemic.
tomorrow.
And
Tomorrow
we,
close of business hours.
We did try to explain
Be
ourselves
very careful.
through the pandemic.
Be
And
really,
our
really
explanations
careful,
did
because
change, but I think it's
Tuesday
fair to say
opening
we might have
prices
done a
is
better
going to
job
be.
of
I have a
being
feeling.
clear about why
I have
we
a
were
feeling
doing it.
Tuesday's
That's
opening
something
price is
that
going to be very
we're aware of
violent.
and looking at.
I mean, no discussion is complete without talking about AI.
Yeah.
With AI coming fast and furious, It could affect
Fed looking at best way to foster 2%
productivity, it
inflation,
could affect
giving out more
employment.
money it is.
There are some people who say we will see for the first time
Treasuries are up
technological
0.5%
unemployment
for the day.
in a
Brent oil
serious way will be had. What are your
4.65% for
thoughts
the
about
day.
it, and how will
WTI
it
only
impact the
1.50.
Fed going
That
forward?
explains it.
So
And if you
like
do see
everyone who's been
oil,
exposed
especially
to what
Western
it's
Texas
capable
oil,
of,
if you do
it's
come
just-
below
it's
$60,
beyond,
right now we are
I
still
mean, I
around that
started about
60,
thinking about it
which
as like
it's very
a better
dangerous
version of
because
Google,
anything below
but it's
60
not. It's like a
signals a
better version
recession.
of a person, you know. I mean, it can do amazing things. And so the question is, all through the 250 years of technological innovation, technology evolves and people worry that it's going to replace human labor and people will be unemployed. And that hasn't been the case. It may be the case in the short run, but in the long run, what it's done is raise human productivity and therefore living standards. So is this going to be the case where it eliminates more jobs than it creates? And
What time is
we just
Arsenal
don't
starting?
know. I mean,
Live score.
you come back in 20 years, will it be the case that just people are much more productive in their work because of AI? Or will it be the case that AI has just replaced a lot of people? And I think it's very hard
But 5 minutes to go.
to say, but it truly is remarkable in what it's capable of. And it's, you know, we
So
just
currently at the moment,
demonstration
we are
by
going
a
to have those
Wharton
interest rates
professor
where they are
recently, and
currently.
you speak to it like it's a person, and it kind of
Are
responds
there
like a
anything to
person,
watch
and the
out
things that
for
it can
in the
do
near future?
are really amazing. So, and by the way, this is early days. You know, they're talking about even the next couple of years will bring more dramatic breakthroughs. So I think it's one of the two
So
or
as you can
three
see, it's the
things
British pound
most
and the
likely to
United
bring
States
dramatic
dollar in terms
change
of
to the
inflation rate,
economy all around the world
not inflation,
in the next
interest
20
rates
years.
currently
And
at the
I'd
moment.
say very hard to say how it shakes out.
Let me turn to
Moving
your
on.
job. An important man once said of your job, it's the greatest job in government. You show up to office once a month and you say, let's see, flip a coin. And then everybody talks about you like you're a god. What is it that you normally do every day in the office?
Interesting.
Is it fulfilling and, dare I say, enjoyable? And do you really feel like a god?
So I would agree. I think
Yeah,
I
it
think
is,
it's the
Bola.
best
It
job in
is.
government. I would agree. I really do enjoy it. Yes, I love the job. It's a great honor to serve. It's quite humbling because everybody
Yeah, one
makes
day,
mistakes. It's just the economy is
one day
just not very
we'll sit on
predictable.
those positions.
So all of that is true, and I do what everybody expects me to do. I read. We do a little more reading though as part of our daily.
that's
My
new.
colleagues and I do part of our daily regime than a typical executive would do. In terms of being a god, I would say that we are blessed with a large number of amply compensated critics who would kind of tend to undercut that. So we don't
Very
feel like a
wise,
god.
a very humble guy.
So let me go to the
I'll
more
wait to see
mundane.
who comes
In
into
that
place next year.
office, what do you?
I think we'll end the stream in the next
What are the
few.
key indicators you look for? What are the sources
Okay,
of
okay,
data
okay.
that you
Interesting.
go to as you try and
Good
make up your
question.
mind?
So I'd say start with labor. There's
Labor.
more labor.
First thing
market
he looks
data
at
and
is
more- and better
labor.
reliable labor market data than probably
NFP,
anywhere else.
labor.
And, it's just a lot of data. And, it's
And then
it's
someone
new
says that
jobs,
you
it's
don't look
payroll,
at
it's
fundamentals. The
wages,
Fed chair, the
it's
first thing is going to look at is labor.
You can break all of those down in different categories.
thing,
It's a million
labor.
different things. So there's a lot of labor market data. It's a great field if you're going into economics because there's just so much to do.
Inflation,
You look at the
number
inflation
2,
data.
inflation.
Also, I keep track of global developments pretty carefully, and I talk to my global counterparts pretty regularly just to stay aware of what's going on. Financial markets.
Number 3,
are really
financial
important,
markets.
And, you can.
That is
and lately,
sentiment. He looks at
something
what
that's-
other
that
people are doing.
We're paying close attention to, as you would expect.
Sentiment
what's going on
analysis.
around the world.
Oh my
in
Lord.
Currency markets, in fixed income markets, in equity markets, all of that. For me, though, my background was more in the private sector and as an investor, and for a significant part of my career. And I have to talk to outsiders about what they're seeing and what they're dealing with for it to really kind of fit together.
That's
for
a
me.
very insightful.
I
That's
can
a
look
very
at only
insightful
so much
talk.
data.
You don't need
And,
to make money, but
to really get the story and the narrative, it's
the exposure that you
talking to
get as a
outsiders
result of
and,
listening to
you
such
anecdotal
people.
data does help things kind of
It's
fit
the
together.
exposure you get whereby
told us about
Someone
speaking with
asks the
business
Fed
people
chair,
last
the
night
person
and
who
getting a
holds
sense
the
of what is
keys to
going
the
on with
printing
interest.
machine,
Um,
what do you look at?
Let me turn to
Then he
Fed
starts with
independence. You've
NFP,
reiterated that you
then
intend to
CPI.
stay in office
Oh
until
my
the end of your
Lord.
term, and that certainly reassured many in financial markets. What are the levers the government or the legislature have to pressure the Fed? And should one worry about threats to the Fed's independence once you're gone?
So our independence is a matter of law. Congress has, in our statute, we're not removable except for cause.
Yeah.
We serve very long
They're
terms,
independent of
seemingly
whatever.
endless terms. So we're protected in the law. So
Okay.
Congress could
That's
change that
very
law,
interesting
but
to know
I don't
how
think
to
there's any
abide.
danger of that. Fed independence has pretty broad support across both political parties and in both sides of the Hill. So I think that's not a problem. There's a Supreme Court case people will have read probably in today's journal at which the Supreme Court may decide whether independent agencies generally, whether they're authorizing laws, can contain a provision that prevents the president from firing members of a commission other than for cause. And that's a case that people are talking about a lot. I don't think that decision will apply to the Fed, but I don't know.
Okay.
It's a situation
Supreme
that we're
Court
monitoring
case
carefully. Generally
mandating
speaking,
the president to
Fed
fire.
independence is very widely understood and supported in Washington, in Congress,
Yeah,
where
that's
it really
something new.
matters.
Mandating the
And
president
the
fire.
point is, we can make our decisions, and we will only make our decisions based on our best thinking, based on our best analysis of the data about what is the way to achieve our dual mandate goals as we can to best serve the American people. That's the only thing we're ever going to do. We're never going to be influenced by any political pressure. People can say whatever they want. That's fine. That's not a problem. But we will do what we do strictly without consideration of political or any other extraneous factors.
That's interesting to note out because I didn't know about this. The Supreme Court did reject the bid to let president fire agency leaders. Case could have stripped SEC, FTC,
Well, I
the
have time for one more
CPSC.
question.
Now, these are
I
government,
know the
I do believe
question
these are
that's on
government
all your
bodies.
minds. What are you going to do
Security
on
something.
interest
I don't know
rates
the
next?
exact full name, but these are government. It's like the CMA
But
of
I'm not
Kenya.
sure that
Now, the US Supreme Court declined to hear an appeal that
and
sought
I'm
to
not sure
give
you
the
would tell,
president
even if you knew.
control
So,
over agencies that long operated
I'm not going to ask
independently,
that question.
potentially
The question I want to
including the
ask
Federal
is a more
Trade
personal
Commission
one.
and
What
Securities
is it that
Exchange
you like to do
Commission.
most at
The
home
appeal
after
passed by two
an
research
exhausting day
organizations
flipping
in
coins
a
in the
case
office?
involving, let me mute this.
I play one of my guitars.
He likes music. He's talking about music. The appeal pressed to, okay, this is really good to look out for.
We need you healthy. We need you healthy. Thank you very much, Chair Powell.
Thank you.
And please join me.
Okay. I didn't know there was a case about that. That's going to be it for the stream. I do hope you've enjoyed. I have learned
All
a
right,
lot.
everybody. You have been listening to Fed
lot
Chair Jay Powell live at the Economic Club of Chicago. Of course, making some comments.
This stream. I have really learned a lot, and I do believe you have too. So have a blessed night, wherever you're going to watch me from. May God protect you. May your enemies respect you. May death neglect you and your families. May you find prosperity in whatever you touch. I'm going to support Arsenal. Nice.